you're looking to invest into the S&P 500, there are many choices to choose from. You can choose different brokers such as Fidelity, Vanguard, and Charles Schwab, which offer many different funds. Although all the funds from these brokers track the same S&P 500 index, there are some differences between each fund. In today's video, we'll be comparing two of the most popular S&P 500 funds, Fidelity's FXAIX and Vanguard's VOO. If you're on the fence about deciding whether to invest with FXAIX or VOO, you've come to the right video. Here's a closer look at FXAIX versus VOO to help you decide which one makes sense for your investment goals. If you're new here, my name is Paul and I talk all things money, so before we get into the video, please smash that like button and subscribe for more content like this. So before comparing the two S&P 500 funds, let's get into some basics of what an S&P 500 fund actually is. An S&P 500 index fund is an investment fund that tracks the S&P 500, which tracks the 500 largest companies in the United States. The S&P 500 includes major companies such as Apple, Google, Tesla, and more. Rather than buying all 500 stocks for your portfolio, buying into an S&P 500 fund can give you exposure to all 500 companies. S&P 500 index funds are very popular investments as they've given an average of around 10% return in the past decade. Now let's first dive into what is FXAIX. I've made a previous video about this fund, and FXAIX is Fidelity's S&P 500 index fund. With a low expense ratio of 0.015%, FXAIX is literally one of the most cheapest ways to buy into an S&P 500 index fund. The 10-year average return for FXAIX sits at around 12.19%. It's inexpensive, it performs well, and it comes from one of the most well-known names in low-cost investing. If you're looking to invest into an S&P 500 index fund, FXAIX with Fidelity is one of the best options out there. Now let's talk about what VOO is. VOO is the ticker symbol for Vanguard's S&P 500 ETF. VOO is offered by Vanguard, which is the OG creator of index funds. While Vanguard was an early pioneer in low-fee index investing, it has slowly let competitors such as Fidelity surpass its pricing and innovative industry lead. VOO's expense ratio sits at 0.03%, so it's still very low. Now, one advantage is that VOO is an ETF, which means that you can buy and sell the ETF throughout any time in the stock market trading hours. The 10-year average return of VOO as of May 2023 sits at 12.16%. Now, one small downside of Vanguard's trading and investing platform is that it's not as good as what Fidelity offers, and Vanguard charges higher account fees. But when it comes to S&P 500 ETFs in general, VOO is the best in class offering. VOO is actually offered in an index fund version with the ticker symbol FXAIX. Now, what are some differences between FXAIX and VOO? The most significant difference between FXAIX and VOO is that they represent two different investment classes. FXAIX is an index fund managed by Fidelity, and VOO is an exchange-traded fund or ETF managed by Vanguard. As a result, they have some small differences, such as ETFs can be traded anytime throughout the trading day, while index fund orders go in at the end of each trading day. ETF investing usually can't be automated, while index fund investing can be automated. Now, it's worth noting that ETFs have no minimal investment requirement, whereas some index funds do. However, in our case, FXAIX has no minimum investment requirement. This means that both FXAIX and VOO have minimum barriers of entry for investment. Now, another important aspect of investing is understanding the fees associated with the investment. This is because fees can compound over time and make a dent in any significant investment returns. In our case, FXAIX and VOO have such low fees at 0.015% and 0.03% respectively, so the impact on returns is practically nothing. Now, the question you'll be wondering is which one has better returns? FXAIX and VOO have an identical investment strategy, which is to mirror the composition and performance of the S&P 500 index. Now, let's visualize FXAIX versus VOO in terms of performance. Looking back at the previous 10 years of returns, there are no major differences in returns between FXAIX and VOO. In fact, during this time period, the average annual return for FXAIX was 12.19%, while the average annual return for VOO was 12.16%. Furthermore, these nearly identical yearly returns becomes more apparent when we look at the percentage difference in returns between both funds. From 2012 to 2022, the greatest percentage difference in returns between the two funds was 0.2%, and given that both funds have an identical investment strategy, this shouldn't be too much of a surprise. In spite of all this though, the major difference between these two funds is in dividend payments. Now let's look at the dividend payment history for both funds in the past 10 years. You can see that VOO clearly outpaces FXAIX in terms of dividends. If dividends is something that you're looking for very specifically, VOO could be a better choice. Now, the ultimate question here is which fund is actually better? Is it the low-cost index fund from Fidelity, or is it the low-cost ETF from Vanguard? The answer to this totally depends on your investment goals. The flexible trading abilities of an ETF could give VOO the edge, but FXAIX does have lower costs. If you're a long-term investor and you buy into a fund very consistently and don't mind that the transactions happen at the end of the day, FXAIX might be the best choice for you. Now, that doesn't mean VOO is a bad choice. VOO is actually 3 times the size of FXAIX, indicating its higher popularity. While VOO is slightly more expensive, it's a very popular and great investment for long-term investors. If you pick either of these funds for a long-term investing goal, you likely won't regret it. Now, one thing you should take away from today's video is that rather than spending all your time comparing these two funds, it's really important to start investing consistently on a regular basis into one of these funds so compound interest can work its magic for years to come. That is it for today's video, guys. Thank you so much for watching. If you're new here, welcome. My name is Paul and I talk all things money and personal finance. If you learned anything in today's video, please smash that like button and subscribe for more future videos. Your life is a masterpiece, so let's unlock your full financial potential together. Catch you in the next video. Take care.